And welcome to the final live stream of 2025. This is the Euro Trader. I'm your host, Market Stalker D. So let's have a look at what the markets have in store for us on this working day, because we obviously won't be here tomorrow. I'm just going to put in some data into my little apps, and then we can begin. Now, I did stay up last night, so I traded silver. You can see by the coat that I'm wearing. So yeah, silver was a beautiful move. I think I caught it pretty early, so I just held it as long as I could before I went back to sleep. And yeah, so it was pretty drama-free, I suppose. Now, we have a couple of levels that we are approaching in and around these areas. Obviously, we have VWAP, but also there was a 73 level that last night represented the gamma flip. So if we carry on through 75, I would expect to see a bit of a squeeze through, but there is also a very big possibility that the dealers step in to hedge around the 75. To the downside, we still have this 70 level that wasn't tagged yet. That remains a danger. However, one thing that I can see is that on this big drop, the volatility, implied volatility, pretty much stayed the same. I don't see a huge change up or down. Now, this could mean that the drop was expected or that nobody's freaking out. So whenever the implied volatility doesn't change, you need to look at the development as something that was orderly and expected. Now, if we look at the daily chart, I mean, what even is this candle? You know, this is something that commodities like to do quite a bit. And I did say, you know, yesterday that, well, a couple of days ago, actually, on Friday, I think on Twitter, I was saying how we're a little bit overextended, that it might tag 80, and then it might collapse down to at least 75. We overshot that a little bit on both sides. So what do we have now? We have this expanding candle formation. So if I get some drawing tools, and we can actually start again on this. So, actually I need a trend line. Do you have that? Yeah. So, what do we have? We have higher high, but we also have lower low. So what the hell? What is this? A megaphone! So, I expected at least a ping through to the middle. Given what's going on with silver and macros, this could be a start of a consolidation into the January. So that will be the most sane explanation for this pattern. Can we go higher? Absolutely. Are we coming into the end of the year where nobody's going to be there to trade it? Yeah. Could silver still move? Yes, it could, but at the end of the day, it is still in a bit of trouble from the macro side. So we are having, you know, a lot of demand for auto industries, especially with the EV, electric vehicles and stuff. Somewhat in computing as well, but I think that it's the electric vehicles that are driving the demand. And we're not mining enough of it. And now China is also imposing some, you know, export fees on silver. All of that is aiding in this, like, a perfect storm for the silver continuation. So I did add to some silver bullion that I have from like years ago, but I decided that I want to keep that just somewhere, you know, under the mattress. Obviously it's in a vault, but yeah, I didn't really like the premiums because the options are like so expensive. So I decided that I didn't want to do that. And then last night Asia session provided me with an opportunity to get into a pretty decent trade, and I realized that I was going to have to stay awake, so I did watch some of the slow markets last night, and yeah, I mean, I suppose silver is going to keep doing what silver is doing, so yeah. Kareem says, hey D, hope you have a good day. I'm already having a good day. I don't know whether I'm going to trade anymore today. I mean, you know, I'm not somebody who's like, yeah, I'm up $2,000, let's carry on. That's enough for me, you know. I'm not that greedy, you know. So I'm probably going to finish it up, actually, for the day after this, and go do something else, go walk the dogs. We've got a dog walk booked. Enjoy the sheep. The sheep have arrived in the field behind us, and it's beautiful to see. There's loads of them. The dogs are not sure about them, because they just got used to the cows. Because we live in the countryside now, and we have this big farm out the back. It's not ours. We kind of own just a piece of that land, and then behind it there's like a 2,000-acre farmer with a bunch of animals and stuff. So he had cows earlier in the year, and I don't know what they do with them. I mean, it's always interesting to me. It's like, where were the sheep? You know, like, what do you do with them in the summer? Do you just ship them off to Scotland or keep them closed up? Like, what happens? So if anyone knows, I would actually be very interested to hear. So Randy says, I live near livestock, it smells. You know what? It doesn't smell at all here. I don't know, this farmer, so my neighbor is the guy who sold me this house, and he said that, in his words, that this farmer is a bit anal, like whatever that means. And his animals are incredible. Like, you know how the cows are usually a little bit chunky, and they just look a bit, I don't know, just like, ugh. These cows are like supermodels. They're like, you know, they're not overweight. They run. So he also trained them to, I don't know, call them for food or something, which doesn't make much sense, but I suppose you can feed them. I don't know anything about farming. I've always lived in cities, so I'm just learning. But yeah, from what I've seen, he makes some kind of a signal, and they all go jogging and running towards him. It's amazing. So I want to see whether the sheep are doing the same, but for now the dogs are really confused as to why there are all these white little fluffy animals in their field, because they look at everything around here as their area. Whenever somebody drives into the farm, because there's a road that goes through that area, you can kind of see it in the distance. They go absolutely berserk, and it's quite funny. So yeah, so I'm gonna enjoy just the views and spending times with the dogs and the husband, and maybe play some video games. You know, just chill out, rest, and everything. Where do I reside? In Surrey. That's the English countryside. It's about an hour and a half south from London. So that's where we are now. Let me see. Somebody's saying, Happy New Year and Merry Christmas, motivations, affirmations. Likewise, Happy New Year and as we say here, Happy Christmas. They say Happy Christmas here, which is a little bit strange. Joshua says, I watched all of your YouTube videos on the channel. Brilliant content. Thank you. A lot of them are older, but they are evergreens. They're evergreen topics, I feel like. You know, they're not focusing on, you know, prop drama or anything. They're just like problems, solutions, something that traders might be wondering about when it comes to profile, and that's going to continue. I'm actually working, I literally have like Pro Premiere open. It's one of the reasons why I didn't sleep last night, because whenever I'm editing the videos, I get pretty kind of into the whole you know, memes and B-roll and everything. Now, I'm probably not going to put too many memes into this one because it's talking about a pretty interesting thing. But then I was going over some B-rolls for the dog walk because I have some footage for that. And then I just get a bit buzzy. So I try to go to bed and I'm like, yeah, this is not happening. I also think I had coffee a bit late because I wanted to work. So this video, since everybody's going like ridiculously AI, I'm going the other way. So I'm going to be starting this video literally like straight out of the shower with a towel on my head and in my robe. No makeup, no nothing. And then I'm going to talk to you as I get ready. And then there is a studio shot of similar to this. There's a dog walk, but the whole thing is talking about the usage of my quantitative extremes. And so yeah, it's starting to shape up. So I'm probably going to need another couple of days to get there. Right, so Randy's saying during winter they're probably kept indoors. Yeah, it must be air conditioned or something, isn't it? Huh, Randy says I'm from Surrey, Canada. Yes, so Surrey, England here. Surrey everywhere. What do I think of gold? Let's have a look at gold. I did look at it last night. Oh, what am I doing here? I have no idea. This is what lack of sleep it does to you. The lack of sleep is not good. Alright, so let's analyze the daily. Obviously, big smash down. All the metals did that, so nothing unusual. Let's have a look at this volume profile. So we do have a little thin area of volume here, and we kind of bounce from it. And if I just look at the pure price action, you can also see a form of demand, which is not super high quality. The problem is that we took forever to get out of it. So the quality here, because when you create a basing consolidating area, the quality of the demand or supply is determined by how price leaves it, not like this, right? This is consolidation, doji. Are we going up? We're not sure. We go down. What's going on? Ah, okay. And then they decide. It's like whoosh. That's a demand that started off really flimsily. So you kind of score it not a great number because of that. Because it had trouble taking off. Not surprising because we did come away from an accumulation that was happening for quite a long time. This was also, through November, and it kind of kept going up, but it was all of the inside bars upon inside bars upon inside bars. So it's not really a clean trend, right? But now we had the smash down straight into a demand. Do I expect the moves to continue upside? I'm not sure on gold. We could be in a consolidation phase. We'll see. But we have an all-time high. We failed the very next day, just like silver. So I feel like this was more silver making a pull on gold than the other way around, which is usually the case. Because gold is usually the one that plays a tune, and then the other metals sort of dance along to it. Well, this time I think this was driven by silver. So let's input some options data into my little algorithms and spew out some actual levels. And these are monthly options, so let me just see where we are and how many of them I need. No, not an all-nighter, Sander. So I went to bed pretty late, so I would say I was kind of asleep around 3 a.m. But I left there, so what I did, I knew that I wasn't gonna, because I can't do all-nighters anymore. I'm too old, too sick to, no, just no. I effectively decided, so I can just about stay awake till 2 a.m. with no consequences. Then once we get to 3 a.m., it starts to get a bit sticky, right? So I did pass out, I think, by 3 a.m., but I put an alert on my phone for 6 a.m. because usually what happens I mean, you can probably see it here as well. So let's have a look at 6 a.m. So here we go, 5:30, and then 6 a.m. strikes. 6 a.m. my time is when Tokyo closes. So here we go. That's the end. So the start of this candle is end of Tokyo. Tokyo. So what happens on the vast majority of days? Like it happens so often. It is very statistically relevant. You have a sell-off post close, and then you get a whole bunch of nothing. You might get this setup that wicks above the Asia high and then sells off, but usually if you're in a strong uptrend, don't expect that it's going to go further than VWAP, and that's exactly what happened here. So it's a classic scalp of bust the Asia high, reverse, tag VWAP, the end. I know about those, but somehow I'm never really awake to capture those. Sometimes on DAX they happen a bit later in the day in the same way, but they use kind of Eurex high or low for the liquidity grab, and then the same thing happens. But you know, on gold it happens much earlier. It already happens at 6 a.m. and on most days I'm actually asleep. So let's see whether I've got data here. So copy that. Oh. Let's try to see what we have. It's going to take a little while to crunch. Crunch. Earl says, I think gold looks good long for a little bit. It's coming off that monster dip earlier. Well, let's see where the options guys are positioned, because it's all very well the market structure. I prefer to look at the actual auction rather than stare at what is effectively already the aftermath of a huge perfect storm of imbalance versus no puts, like nobody was short, and then once the dealers decided to flip everybody on their heads, everyone's like, oh my god, what happened? It's what dealers do. That's what they do. They basically see the opportunity and they go, this has gone up way too high, let's hedge. And then if you've got nobody to the downside waiting to protect the complete meltdown, that's what happens, and that's what silver did, right? I did warn about this. I said, you know, it might get to 80, got to 82, and I said we could see 75. We saw almost 70, so I did know that it was going to happen, and I was talking about 72 and 70 yesterday, right? If you were here, I said, well, you know, if we get anywhere close to like 72 to 70, I had major support here, but I also had something like strong OI, strong open interest level at 72, and they smashed through 72, never got to 70, which could be a sign of bullish nature of this market, and then just consolidated in that area. Do you think that's an accident that they consolidated at the two prices that had pretty high open interest around them? No, it's just dealers. So anything that we're seeing here is just a post aftermath of whatever dealer wants to do, dealers want to do. So yeah. All right. So calls are still pretty dominating in gold as well. So let's have a look. Where are we now? Okay, so we're close to 4,400. I mean, there are, let me see how many. Yeah, so there's a lot of calls, open interest, located at 4,400. So I would expect we're already actually seeing that. So I would say that that's the hedging around 4,400 has already happened. So that was the grab, smash and grab, as I like to call it. So that's not very helpful because that's too close, right? It's way too close. They actually kind of missed it by a tick, so that could get revisited. To the downside, 4,300 has not changed either, so there is, but it's a put wall because we actually have some puts at 4,300. Reasonable amount. It's almost 3,000 open interest as it kind of looks right now. These are monthlies, they're not end of day, they're monthly options. So I would expect that we remain, like, unless something really odd starts happening, and if we cannot hold above 4,400, I would expect us to be range bound between 4,300 and 44. The gamma condition today is positive, so expect those mean reverting moves on sell-offs. They will buy things up. On rallies, they will sell against it because that is the nature of positive gamma environments. So you just need time of day and obviously levels. So whatever you're using, just keep in mind that 4,400 and 4,300 are sort of your extremes of the current range, and we could end up just consolidating in there. I mean, they've made their money yesterday, they made their money Friday. They made everybody think that it's going massively up, then they sold off. Do they need to trade anymore today? Probably not. You know, who's going to be left trading tomorrow? I don't think it's going to be the dealers, so it's probably going to be poor people who probably got bit by the last 2 days. You know, on Friday, everybody was calling tops, and then it ran massively to like high heavens. And then on Mondays, everybody was saying, well, it's got to keep going. Like, it's a classic sort of going in breakouts into areas on very high expanding IV to not really get what the whole markets are trying to do. So anytime you see expanded implied volatility on any move, that is not an orderly move, right? That means there's a lot of panic inside it. So it's either, you know, panic selling, or there's like some kind of uncertainty in the rally. It's not a stable rally, right? So a rally on expanding IV, that's not what you want to see. You actually want to see stable IV or compressing IV. That's then a healthy rally that is expected, and no matter what the price is, if that is what the data is saying, even if we get up to like 500 on silver at some point in the next few years, and yet you see a rally into 500 that is not expanding on the volatility, everything is just, you know, very orderly, that's still expected and healthy. But as soon as you see that IV start spiking, something's up. And every time I see that, I'm like, I probably won't be buying it up here. Let's see what happens the next day. And this is where my swing trader side kicks in. You know, I can perfectly wait for an extra day or two to get my big move. I don't, you know, really don't mind not trading on some days. So yeah. How am I analyzing option calls and open interest? It's an algo that I wrote. So I basically have an API ping into bar chart, and then I created about 3 different algorithms. So one of them just crunches how many open interest we have. Then the next one crunches the gamma exposure, so whether we're gamma positive, gamma negative, and where kind of the flip is going to be. The third one tracks implied volatility. So it's not quite as simple as like, oh, can you just show us how to do that? I would say a decent coder, but then once you've come up with, you know, the actual algorithms that will do something that you want them to, I will then query those files through an AI prompt on Cursor AI, which uses, like, you can choose what it's going to use, but I like to use Claude because I feel like it's got higher reasoning. And then I just ask it to crunch from my 3 files. I ask it to crunch those levels for me. So it is something that I've been looking at. I've been looking at magnetic call and put walls probably from the beginning, so for like 19 years now. I started trading options myself probably about, I want to say 9-10 years ago. And then I obviously continued just to kind of dip in and out of them. They weren't my main source of income, but they definitely started being more interesting to me. And then about 7 years ago, I started dabbling with crude oil options, and that was a bit of a learning curve because I realized that I could make quite a bit of cash in a range bound market as well, especially when we went post-COVID, and it just got stuck in a range between sort of 70 and 50. And I was like, not good for intraday, but so now we have crude oil that's a bit meh, so we'll only do options through them. But when it comes to actually crunching the data, it's not quite as simple as just me going, oh, it's a simple calculation. It's not. So it's a little bit tricky because there's multiple price points, and then you have to cross-reference and compare gamma at this point to that point, and then do a lot of number crunching. So I don't want to nerd out on you because people are just going to stop watching. But yeah, so it's basically 3 different files that I'm using to get these levels. But anybody can get the data, right? Anybody can get an API from bar chart. You don't even have to have an API. If you don't mind working with delayed options data, you can just go and copy it, and then just go, well, this is the level. All right, so what do we have past that 4,400? So 4,450 has a little bit more. I look at all of this as a weak structure because, if we move away from the options chain for a moment and go into the auction process, this is unfinished business now because these are single prints. So if we start to rise up from that, oh, my voice went really high there. If we start to rise up through that, it would be, I wouldn't be super surprised if we're just going to continue to rise into the single print to reach these like higher volume nodes up here, especially if silver continues to rise through 75. So on silver, I feel like I have a better read than gold, because gold is all a bit kind of messy at this point, and I don't really know what they're trying to achieve here. But if we look at silver, I'm finding it much cleaner. So there is a potential for gamma squeeze through 75. Last night when I was trading, I was looking at the gamma flip. At that point, it was actually 73. So if they hold 73, it's not a gamma flip anymore. That's changed. And actually, bizarrely, throughout this whole thing, especially yesterday, I was shocked to see that the whole gamma condition was close to neutral. And I was like, what? Like, we've got to be a negative gamma, right? This has got to be no. Absolutely not. So they actually kept it pretty stable. So the way I'm reading this sell-off is it was an overshoot on Friday and just a correction. So it's not really that relevant in the grand scheme of things. So I would expect to see more upside. Now, do we go down to test 70? Because that's kind of left as a low-hanging fruit there. 70 is a major support. We still haven't tested it. We might need to go there to pick up some more orders in order to have more steam to keep going back up. Wouldn't be surprised. So both sides of the story definitely possible. But where we are right now, this is too high for me. So I would like to see some kind of a meltdown through 73, maybe even 73 just to get tagged and maybe get down to 72.50 and then to start that rise. Is that going to happen today? I don't know. We had 2 very big days. It's time for a bit of a hangover day, right? So just like I haven't slept and I'm not hungover, but it kind of feels like it. Whenever you don't sleep, you're like, oh, like really tired, and your brain doesn't work fast enough, and and everything takes a bit longer to come out words wise. So I would be just like, this is a pure guess, okay? I'm not saying it's going to happen because we always, like, anything can happen in the markets, but just in my opinion, the way I've seen commodities behave, if you have one big day followed by a massive smash in the opposite direction, the third day that corrects that first move is usually a consolidation. So I would kind of pipe down and not expect to have another big day, because then you're getting into a territory of not being very realistic. So yeah. Ems is saying, EMS, Ems. I'm going to drink some water, catch you guys tomorrow. So we're not on tomorrow. We are actually having a day off for the New Year's Eve. And TopstepTV is also going to be off, so you're not going to see us. Well, you're not going to see me until next week, really, next Monday. Because I don't know whether they're coming back on Friday. Are they coming back on Friday? They might be. But yeah, you will see me back on the 5th of January. So yeah. Do I look at the underlying ETF on some metals? I don't. I do not, because the futures markets and the spot markets have their own dynamic, and then the ETFs are effectively derivatives of whatever the spot prices are doing, and they are typically less liquid, if you can call anything these days less liquid. They're more stable, let's put it that way. So some people prefer ETFs for like longer term investments because they will give you more stable, less volatile returns. I was never the type of an investor that's like super safe. I'm actually pretty aggressive on the investing side. So whenever somebody suggests ETFs to me, I'm just like, snooze. So yeah, I go for more... maybe if it's like a pension scheme or something, it's like, yeah, let's do some ETFs, because, we want to have something for when we're very, very old. I'm getting to, I'm 45, need to start thinking about these things. And, but when it comes to actual investments that I'm doing right now, I'm still pretty aggressive. I'm not somebody who's, afraid to risk cash. And if I think that, at this point, after 19 years of doing this, I think I have a pretty good grasp of what's happening, right? So generally, I'm able to guide my own decisions, but we do have an advisor. We're not just kind of winging it through life. And so it's ETFs are just not something I look at. And I know there are options on the ETFs. So the only time you want to look at those is, let's say that you have an option, and I don't even know where that will be. Like, let's say copper maybe. So you would get a day where the levels with high open interest are just completely far away. For whatever reason, maybe it fell a lot, maybe it rose a lot, and now you need time for people to build the open interest around the sort of current prices. Well, at that point, you might want to go and look at the ETF options and then see where they're positioned, and then maybe convert those levels into the futures market, and then see if you can find some kind of confluence. That works. But personally, if the product has outright futures options, I know that a lot of users and producers will use actual futures options and spot prices to kind of either hedge or get, better pricing for their cash forward sales or purchases. And they won't do it through an ETF. So why should I? So, I think commodities are a little bit different in that regard, that you actually have a physical commodity that people are dealing in, and it's not all on the chart. It certainly, some of it is, right? Some of it is a technical analysis, and a big part of what we do is looking for inefficiencies on, smaller time frames to try and capture those intraday. But when you zoom out and when you actually realize what it is that they're doing, it is a whole different story of, jewelers, automobile industry, some computing as well, and it's it's interesting. But there is a definite massive use of commodities outside of the charts, right? So that is what differentiates them between equities, because equities are cash settled, and when you buy some shares of something, you might get a piece of paper, but you're not going to get a lorry in a warehouse near you delivering the product to you, which is what actually happened to a friend of mine. Not like that though. So what happens is that he was trading crude oil at that time. It was a long time ago, and he forgot to settle one of the swing positions that he was in. So he realized the mistake, but there was nothing he could do. And then the whole delivery process started happening. So and it's a horrible process to get it to not happen, because you effectively sign up for, one crude oil is like 1,000 barrels of crude or something, and it's crazy because he had to get in touch with like the warehouse, and they were like, it will be delivered in a warehouse near you kind of moment, and he was like, no, but I don't want it, and they're like, yes, but you bought it, you didn't, it's you have to go through the delivery, and it was a very painful process to get all of that canceled. It does happen, so they do have avenues to ensure that the people don't get unintended 1,000 barrels of crude oil just appearing on your doorstep. And it's always in a warehouse, so it's not, I always joke, make sure to close your crude oil, positions at the contract rollover, because you don't want 1,000 barrels of crude oil appearing on your front lawn. But it's not a lawn, but it will be a warehouse near you. So it's it was a funny moment. We were all just laughing our heads off. So yeah. Can we trade tomorrow? Are the markets open? Does anyone know? Honestly, I'm not going to be trading tomorrow. I think they are partly open, I think. Bruno, help me out, man. Do we have a shortened day tomorrow? Are the markets are usually open on New Year's Eve. But I don't know whether it's a full day or whether they're definitely closed on Thursday. But usually we have like a half day or something. World Raider says, you're only 45 and always talking about how old you are as a trader. I think you understood self-talk. Don't invite negative energy into a mindset or body. Thank you for that very spiritual thing. First of all, I've been trading for 20 years, nearly. So we're coming up to 20. So tomorrow, Bruno says tomorrow we have a regular day. So if you want to trade, you can. Should you? No. But half day was only for the 24th. Yeah, because that was Christmas. So yeah, just a regular day. But I don't think we are on air, are we? I mean, I think I looked at the schedule. I swear I look at the schedule. I do swear, but then it just doesn't stick in my head. I'm just like, oh yeah, schedule. Because it can change in a flash as well. It's not like, it's like set in stone. Sometimes they switch out our schedules in a blink of an eye. Yeah, so we're off air, no live streams, no nothing. And that's the same on Thursday. And then Friday we come back. So Royal Radar, yeah. So you're probably somebody who's, I don't know, even older than me, right? But you have to understand that a lot of these streams are watched by people who are ballpark between 25 and 37. as like the audience that we get. And yes, sure, there are older people as well, but the majority of the viewers are pretty young individuals. So when I'm joking, when I say I'm old, I'm Granny D, I'm not thinking that as like, oh yeah, I'm very old. No, it's a joke that actually started on my channel. So I look young for my age, okay? And everybody's always very surprised to hear that I am in whatever age I am, right? So when they found out that I was not in my 20s, because a lot of people when I first got on YouTube, they thought I was like, 25, 24, because it was a long time ago as well. And then they found out that I wasn't. So then they jokingly, my community, Market Stalkers community, started calling me jokingly Granny D. So it's not out of any kind of malice. It's because there's a big difference between what I look like and what my age actually is. So it's a positive joke. So it's not a negative thing. I just wanted to clarify that because I don't think people who are outside of the Market Stalkers community get that. So when I'm saying, Granny D over here, it's an old joke. It's an inside joke from my community, okay? Yeah, exactly. Yeah, and there you go. Joshua says, I thought you were 35 max. Yeah, so imagine, now I'm 45 now. Imagine how I looked like 8, 9, 10 years ago when I made my first video on YouTube. I looked 12. It was ridiculous. And I had problems buying alcohol up until I was probably like a few years ago. It stopped happening. I could finally buy some alcohol without ID. Yay. So I've always looked very young for my age. It's a blessing. And, I'm very happy. But I will say that in real life, you do see a bit more of the age. Obviously, the lights are very forgiving. So in real life, I'm probably looking like I'm at least mid-30s, especially in daylight. But it's still good going, right? So yeah, it's a joke. It's an inside joke. Nothing serious about it. It's actually quite a funny moment. And yet people are like, don't be so negative. It's not nothing negative. I promise. It was just just a bit of fun with my community. Yeah, so Matty says, I always thought you were in your early 40s anyway. Well, there you go. Yeah, exactly. Earl says, listen, Dee, I don't care how old you are, we're not going to go on a date. Yeah, we're not, mate, because I've been married for 20-some years, so, yeah. Alright, so Dow says, I tried to use the optional was adjusted to premium on NQ expiration date. Turned out the premium was jumping between 200 and 300 points, so those levels are useless. Does gold have a premium? Well, I mean, any options have, premium is the price of the option, right? But if things are extremely volatile, then I don't know what data you were using, so I should probably ask that. And I don't know, what were you trying to get, where was the data? Because data is, Joshua says, your first YouTube video, we need the purple hair back. I wish I had the energy to do the messing of the hair again, but I don't. So I'm just going to be gray because I'm salt and pepper now and I'm growing it out. So what data did you use, though? Because quality of the tick data and the premium data and API and whatever you're using, that has to come first. If the data is frankly shit, you're not going to get anything good out of it. I don't know how, what you mean about the premium kept jumping 200 and 300 points. It's yeah, there's an options chain, but usually they are not that jumpy. Usually there's a call wall or a strike price, and then there's a whole bunch of things around it. On very liquid days, there could be some shifts in the price, but on slower days, they shouldn't change that much. It's even on very liquid days, I don't think I've ever seen just premium prices jumping randomly, especially not an NQ, because, a lot of people trade that, so. Bar chart, okay. And did you use the API or just the free stuff that you get on the delayed pricing and stuff? Because that's not very, it's delayed. and B, you should probably ping it in real time rather than delayed. So yeah. Earl Wallace says gray hair could be cool. I don't need it professionally dyed, because he says professionally dyed gray, silver, I guess. I don't need it dyed, because guess what? I'm gray already. This is all, yeah. So I figured it would look cool, and it would also free me from dyeing my hair. I've just had enough. I'm going through like a bit of like burnout from social media, dyeing my hair, just, always looking put together and stuff and whatever. So in some of my videos, so I really need to like stop being so obsessed with the presentation and stuff, because one of the issues why I stopped making videos is because on a lot of the days I feel terrible and I always want to look presentable to you, but I've just, I've realized everybody's going down this stupid AI route, so I said I'm going to go back the other way, and I decided just to start making some videos where I look terrible because it's a terrible day, and just to be a little bit more real with you guys and just share what it's like to actually be a chronically ill trader who's trying to keep all the businesses together. So yeah, I don't look burnt out. I don't, thank God for makeup, but trust me, if you will see in the new video, I don't look great. Like, I have really dark eye circles, and my skin sometimes reacts to weird things, so it's like all red and stuff. So yeah, it's going to be a little bit different going forward, because I'm not, I'm going to still have nice studio parts of it, but I have to start making content again, because I haven't really done that forever. So yeah. Anthony Chapman says, I'm 51, only just started at 50 learning about trading. Yeah, you see that's the another thing where if we're going to look at people going into trading and looking at newer traders almost as like children, right? Because you're just learning about the levels and yourself and everything. You're starting your journey. I've been doing this for like literally almost 20 years. And, you get to a point where it's just there. It's just another thing you do in a day. And whether it's a good day or a bad day, you just go, okay, well, didn't read that one. But it doesn't take over your life. Let's put it that way. So, whenever I see people doing 50 trades, 100 trades a day, I'm like, I've been in the same trade for like hours. And I've made like, 350 ticks or something. And they're like making tiny bit of ticks. And then at the end of the day, they have all the commissions. They have everything. And they're exhausted. And I'm like, I just did one trade and held it for 4 hours. It's like, I walked the dogs. I did some laundry. Maybe played some video games. Again, that's my favorite pastime. Tidied up the kitchen. And you guys are like sitting there clicking buttons. I want to be as less involved. So minimum effort for maximum gain. That's what trading should be all about. But most people do the opposite. Maximum effort for minimum gain. And it never, it doesn't make sense to me, but, Yeah, Royal Raider says, likewise, 42, looking 30, but all of my non-business owner and non-investor friends look 55. Yeah, exactly. My husband is turning 60, like literally in a week's time. He looks nothing like his age, and he's I'm so jealous of him. It's like, he looks mid-40s, maybe late 40s, like on a day when he hasn't slept. But yeah, he's just another one of those, right? And everybody thinks that I'm, and there is a age difference between us, but he's not the most mature person in the world, and I am quite mature, so we sort of met in the middle. Very capable guy, he had an amazing career as a software architect, but but we just don't look our age at all. Like, people get shocked And I suppose it's not that we took care of it. Like, I do take care of myself probably now more than I have ever. But, you know, we only got heavily into fitness, I want to say 2015. We both kind of went, you know, really into the whole bodybuilding thing. I did the competitions. He didn't want to do the competitions because he's, you know, he's more like he considers himself a proper nerd. So he's a little bit, you know, he can be a little bit socially awkward. So can I, to be honest. And it's like the whole content creation or meeting people that he doesn't know, it's not like the most comfortable to him. But yeah, we both got into bodybuilding. So I went to do competitions. He did not want to do that, but he kept coming to the gym with me, like every time I went. And I used to go like 6 times a week before I got sick. So, and yeah, at one point we both looked like absolutely amazing. It was crazy. And he kind of kept that up. I think he goes to the gym now 3 or 4 times a week. I'm not able to, unfortunately, and I do miss it. But I think that's maybe a part of it. You know, some of it is genetics. Other side of it is, you know, just taking care of yourself. Although, again, with some of the drinking he's done as an English guy, I don't know if I can claim that he's taking care of himself. All right, let's have a look. Show us your setup. I just bought a dual screen extender for my laptop. So my setup in the office is actually a lot more crazy. It's really messy right now because yesterday I was doing editing of the videos and I have a lot of crap on my table right now. So I have like random things like trivia. Some extra pieces of makeup that I'm sporting, loads of cups. I'm known by hoarding cups, right? There's like cups everywhere. Just random moisturizers and shit like that. So and then a very lovely sort of selfie sort of stick, just like random. So I need to sort that out before I show you the setup. But I have posted it before on Twitter. Like if you go back far enough in time. One thing that might be new from that photo is that I've changed the lights around up a little bit and I've made all the screens, because with the content creation I want to have my camera right here. I don't want to have it to the side or somewhere weird. So I always have to have it like in the middle. And then I had to get screens that are smaller, slightly smaller, and then it irked me that all the screens weren't the same size. So I bought like three bottom screens are all the same size, and then the 2 higher ones are a little bit bigger. So I've got 5 screens here. But there's an addition, which is an addition from my old house, and it's an Elgato TV prompter. So that goes on my FX3 camera. So I can make a video about that if you want. It might be actually a bit of a fun content behind the scenes look of this office. And actually Paul H, I don't know whether you remember Paul, he's not been around recently, but Paul's been here a few times now, and I should probably get him on the show at some point. I know he's been really busy, so yeah. So yeah, maybe I'll do a video about my setup, but it's not like I don't have crazy screens or anything. They're actually pretty small, because it is intentional, right? So I want them... First of all, I hate the curved screens. I don't know how people do that. And I like to have separate screens rather than smushing everything on the same massive screen. I just never really resonated with that. Maybe that's me being old school. But yeah. How much RAM you got? Oh God. I had to buy a brand new computer when I moved into this place 9 months ago. It wasn't 9 months. Was it 9 months ago? It was May. So I moved in on 9th of May. So however long that is. But my old computer didn't survive the move. And then I literally had to get a new one in 2 days. And I honestly, because it was such a... I know I got a pretty decent setup, but for the life of me, I can't remember right now exact config. I can show you if I can ever get to the task manager here. Where is it? It's somewhere here. Does it say here? GPU. Hold on. Maybe it's in properties because I'm looking at. Yeah. So this is the setup for the RAM. So take that as you will. Yeah. But yeah, the components that I have, they should be in properties. Yeah, so it's 64 gigs of RAM. So there we go. Yeah. So yeah, it's a decent one. It's a decent one, you know. But I literally had to buy it like super quick because it was like crunch time. I used one of my payouts actually to buy the computer. Lumber Trader says, got a new setup for myself this month. Went with 49-inch ultra wide and a Geekcom A9 Max Mini PC. That thing cooks, yeah. So I do a lot of video editing, so I had to get a really strong graphics card with like a good GPU and stuff. Yeah, because the previous one, it was good, but then the years went on and it just wasn't as good. So I had to, and then the rendering was taking like forever and a day, and so I decided to upgrade that since my computer didn't survive already. So I'm like, well, might as well get a new computer, right? So. Dow says, all right, Happy New Year. Thank you for the info. I'm going to wait. I'm going to wait for New York Open or just go to bed. I've been trading for 6 hours today with breaks from minus 400 to plus 400. Now end of day on plus $100. So go into your data. And I would urge you to look at the time of day when you are most profitable. You'll be quite surprised. Most people think that their profitability is in the first hour and then they put some reality goggles on, and then they go, oh, I actually suck trading the open. That's interesting. So maybe I'll just wait for the first 15 or 30 minutes to settle. Data is amazing. So export your trades into something like EdgeWonk. I quite like EdgeWonk because it's got custom metrics. But you can also use anything like TradeZella, TradeBiz, like whatever the platform is. Anything that can tell you hour by hour performance crunched, like and aggregated from many days. Any combine that you blow, use that as well, because you know if you ever find yourself in a single account, all of those bad decisions and Muppet moments and everything, that should all go into your metrics to give you the real outlook of what you do and how bad it really gets. Because we don't want to be making the risk models on the best case scenario. I think this is where people claim like 90% accuracy, and then I take them to the VIP program in Topstep and I force them to trade for a month, not even that long, for just a month with no resets. Guess what? Those people who are like, I've got 75 accuracy, 80%, 85% accuracy, most of them were floating between 13 and 30% accuracy, like nowhere near the little dreamland that they were in. So I'm like, I'm sorry to burst your bubble here, mate, but this is far from good. No, that was just a combine I blew. Oh, right, so you wouldn't do that in a live account. What about that XFA that you blew up? Oh, yeah, no, that's not in there either. Oh, really? Why not? Because that was a funded account that you blew up, you know. But that's just me. I'm a little bit, you know, a little bit rigid when it comes to the data and what you should be including in there. So, you know, when I say things like my overall accuracy over long periods of time is 43%. And I base my risk model on the fact that I need to have at least 1.5 R multiples on my trades to make that work long term and have a positive expectancy. That is not based on, oh yeah, I suck. Can I have days? Like I've had weeks when I'm smashing it also at 80%. But that's not reality, right? It's not reality. So we have to take all the good days, the bad days, and tweak as we go along. And that gives you a very good, realistic picture of your accuracy and everything. So try to, if you're going through multiple combines, multiple XFAs, try to aggregate them into something that will help you going forward. So that's going to be my little tip into the new end of the year, how to use data to move forward as a trader. It's a very powerful thing to be doing, looking at your own data. All right, well, I mean, I'm not going to be doing anything today, right? So I've already made some cash here, and I think it's time to get the whole resolutions going, right? So almost. But yeah, I think I'm gonna end it early to maybe sign off this day into the new year and wish you all a happy new year, because I'm not gonna see you until the 5th. Hopefully 2026 is going to mean a lot of breakthroughs for you. And I think that many of you have already had many breakthroughs in the 2025 period, but let's make 2026 the year when it's all about growth and all about setting smaller goals that are not a year out. So I will also remind you that I mentioned a book called, on the main broadcast, I mentioned a book called The 12-Week Year. It's by, forget his name now, Morgan someone, but the 12-week year focuses on the fact that a year is a long, long time. And if you look at how companies do things, they set a budget for the year, then 3 months into it, that budget is completely broken, and then they set a new budget and it keeps expanding and expanding. And the same thing happens with your goals. So you set your goal, next year I will become consistently profitable. First of all, that's a very vague description. Why not set a measurable goal that is very close? Let's say in a month, I will stop sizing up unnecessarily. I will stick to the maximum default predetermined size. That could be one thing that you work on in January. So come end of January, you then go, okay, what was my task for January? And then you go, oh, okay, so it was to not mess with my size too much and not add like a lunatic without rhyme or reason. How did I do? Do a review of yourself. Tough one. And then you go, oh, so I broke it 2 weeks in. Well, that's not good. Let's try that again. So into February, I'm going to still try. So you don't move forward with your new tasks until the biggest task, the biggest problem that is hindering your performance is sorted. Not a year out and some immeasurable goal that you can't define or track. No, actual issues that you have in your trading. So as a homework, if you guys are open to it, as a part of the New Year resolution to get better at trading, why don't we all come up with, let's say, 5 biggest issues that are holding you back in your trading, something that you keep repeating over and over, and you're just seemingly unable to sort it out. So we're going to work on those, and you're going to work on them 1 month at a time next year, and using this idea of a 12-week year, so a 12-year period, 12-week period, or even a 4-week period. I actually quite like 6 to 8 weeks for people that I mentor, to reach the measurable one single goal at a time. And even though it sounds like it's going to take forever, you're going to get there faster than the people who don't do that. That's going to be my sign off into the new into the new year. So yeah, let's see what the new year brings. If I don't see you again, have a wonderful holiday period. Hopefully you get some rest And let's sign off 2025 with a bang. So maybe consider ending the day early and just, staying away from trading and moving away from the charts. I don't know how much action we're going to have today anyway. That's all I have for you today. I wish you a happy new year and happy holidays. I will see you again on the 5th of January. And until then, trade safe. This was TopstepTV with the Euro Trade. I'm Mark Sokadi, and I will see you in the new year. Yay!